Hello, good afternoon, everyone. I talked a little bit about what Grameen Foundation does, but just a quick refresh. So Grameen Foundation is a technical expert, and we work with a variety of financial service providers and help them develop innovative solutions to serve the bottom of the pyramid market. So that's what we do. We are showcasing a particular project here, which is a partnership between a microfinance institution and a mobile money provider. Before I get into what that partnership was about, I want to start with what our problem statement was. So our problem statement was that rural, poor women in India do not really have access to financial services. The reason they don't have access to financial services is because they don't have transaction points where they can actually go and do transactions with the formal financial sector. They have lack of information about what sort of financial services and products are relevant for them and that they could even use and benefit from. And then the third thing is something that's been talked about multiple times today is the lack of trust. So if they're used to behaving in a certain way, if they have to change their behavior, trust a third party, why would they do that? How would we encourage them to build that trust? So that's the problem we were trying to solve. When we started out conceptualizing what the solution could look like, I think it was clear to us from the get-go that there has to be a digital element in the solution, particularly because of the physical infrastructure issue. So if we wanted to create those touch points for those women where they would be able to do the transactions, these could not be physical bank branches. We had to leverage technology in order to enable them to transact. So what we did was we tried to figure out a model which would enable a partnership between a microfinance institution and a mobile money provider. And the reason we picked these partners, there are very concrete reasons behind that. We picked a microfinance institution that had been working in the community for over a decade. In India, microfinance institutions can only provide credit. They are not able to provide any other financial service. But they were seen as very trusted partners in the community because the community felt, or the women felt, that every time they had a need, it was this institution that was standing there for them and they could approach them and get money when and as they needed. So the microfinance institution was a natural sort of trusted partner that we could work with. Also, operationally, these institutions, the way the model works in India, they actually go out and meet these women on a weekly or a fortnightly basis. So that's, again, a regular touch point that we could leverage. So a trusted intermediary with a regular touch point that we could leverage. But it had to make sense for the microfinance institution also. Why would they want to transfer their clients onto the digital platform? And the reason they wanted to do that was because their own business was very, very cash heavy. So all the loans that they dispersed were in cash, and all the money or the repayments they collected was in cash as well. So for them, cash management was a huge challenge. And we felt that if we could introduce digital into this model, it would actually alleviate their pain as well and mitigate some of the cash management issues that they face. Then comes the mobile money provider. What is in it for them? So mobile money providers, in India, given that the unbanked or the poor or the rural are actually a huge potential market, but they remain largely untapped because for the mobile money providers, it's a chicken and egg problem. So either you place agents first and wait for the transactions to come so that it makes it worthwhile for the agents to actually engage in this business, or if you appoint agents too early in the process before the population or the community has learned to go digital, then the agents lose interest. And agent churn or turnover in India is a huge, huge problem. And we also heard earlier in the presentation that recruiting, training agents is a huge cost. So what we wanted to do was, with this partnership, we wanted to have the women be trained by the microfinance institution about about mobile wallets. Then they would use the mobile wallets to actually repay their microfinance loan. And these payments, even though small payments, but collectively, because the volume was high, was actually a pretty substantial sum. And these are predictable payments. These payments are coming on a weekly or a fortnightly basis. So for the agent, right from the get-go, you have sort of a captive audience who's going to come to you for a predictable set of transactions. And so that's the model we constructed. And it's a bit complex, but the idea was you had to make sure that all the different parties engaged in this in this model were benefiting from it, and that's the only way it would sustain and scale. So what did we do? What we had to do was to start with the customers. And we actually engaged with a design firm to actually undertake some research. And in fact, we have a video that summarizes the outcomes of those research. So I think if we can play the video now, that'll be great.
Rural borrowers to switch to a mobile banking solution. Not an easy task. We started by getting everyone together in Delhi to make sure we started the journey on the same page and to understand the complex challenge of making this work. We then headed out into the world to understand this challenge on the ground. We based the project in Lucknow, visiting 9 villages over the course of the week within a 3-hour drive from the city. We met a mix of borrowers, their husbands, their sons, their loan officers, and spent time understanding the challenge from the perspective of local telco agents and branch staff. We learned that these women had a lot less independence than we had originally thought. We learned that even small pieces of knowledge were the key to influence at home and in their community. We learned that the immediacy of cash was dangerous and saw them design solutions like these pots to keep cash under control.
मैम इसमें जो पैसा है वो हम खर्च नहीं कर सकते। अच्छा। और घर में पैसा रखा होता तो खर्च भी हो जाता है, भाई कोई भी जरूरत पड़ी तो खर्च हो सकता। और इसमें अगर मोबाइल में पैसा है तो हम जब वहाँ जाएंगे तब।
We learned that their only source of money is skimming off the top of what was given to them to run the household. We learned that the only mobile in the household is in the hands of the husband, which makes him the key to adopting mobile money. They don't see banks as a place for the small transactions they're making. We explored mobile money as a time saver worth paying for, but at the end of the day, the only currency that matters to these guys is money. And our hypothesis that safety would be a key benefit of going cashless was pretty flawed. But we did understand how to make this work. First, leverage the existing hierarchy of lending groups. We know there's not supposed to be one, but there is in every group. And in this case, it's an opportunity to drive the change in behavior we're after through an each one, teach one approach to education. Next, put some structure around the behaviors we want from loan officers. They need to know why they're doing this, be measured against clear outcomes, and be rewarded for the change we want to see. Target gatekeepers. If we want payments to be made via mobile money, we need to target the person with the mobile. That means targeting husbands and sons as well as borrowers. We need incentives to work harder. If users get hooked on mobile payment after their third transaction, let's shift incentives from sign-up to repeat use. We need to keep sign-up simple. These people don't have the documents and the literacy to fill in all of the paperwork required for an advanced account. Let's start with an intermediate step they can take in the short term. Agents don't see mobile money as a big revenue opportunity, but those that offer a mobile money top-up see an upswing in their overall business. Let's sell mobile money as a customer acquisition tool to these guys in order to build our agent footprint. And finally, let's think ahead to where we want to be in a year and make sure we aren't undermining that outcome. The team started piloting a solution 2 weeks after we wrapped up our fieldwork.
So I think the video gives a context for, what is the what are the challenges we are dealing with, and what is the customer that we are trying to serve here. So we took a lot of cues from the research, and in the pilot that we designed, there were a few key things that I think have really worked for us. So one is, sorry, I'm out of time. Okay, I'm sorry. I'll just end with just a few data. So we ended up training about 20,000 clients on the use of mobile money. We had about a 35% conversion rate in that about 7,000 clients actually did at least one transaction. Of those 7,000, we actually had a 50% conversion rate, which is that about 3,500 clients actually did 3 or more transactions. So I just wanted to share that.
Thank you. Next is Software Group.